If you can find a job, if you can keep your job, then count yourself lucky. A new report from the ILO, the International Labour Organization, paints a miserable picture of the global jobs market and blames cutbacks for the big slowdown. So how much worse do things have to get before they get better? Unemployment in the age of austerity. This is Inside Story. Hello everyone, I'm Kamal Santamaria. It is yet more confirmation, as if we needed it, that these are extraordinarily tough times. A report from the International Labour Organization, which tries to be vaguely optimistic in its title, which is preventing a deeper jobs crisis, but it really has nothing but bad news. It points to an alarming situation in the global employment market, a market which shows no immediate sign of recovery. Crucially, the ILO is critical of the austerity measures taken by Europe's economies, saying not only had they failed to bring down budget deficits, but they'd in fact hurt economic growth and hit the jobs market as a result. An estimated 196 million people were unemployed worldwide at the end of last year. That's probably going to go up to 202 million this year, a global rate of 6.1%. And unless there's a change in policy direction, says the ILO, the jobs market will stay like this until the end of 2016, and economic growth may slow even further. So let's break it down a little further with some actual findings and some numbers from the report. The ILO warns of a, quote, new and more problematic phase emerging in the global labour market that's more problematic than the more than 40% of job seekers in the advanced economies who've already been out of work for over a year. It sees big problems with youth unemployment rising in both developed and developing economies, a trend which we've already seen in parts of the Middle East and North Africa can have far-reaching implications. And then there's that 2016 prediction that advanced economies, especially those in Europe, won't get back to their pre-crisis levels of 2008 for another 4.5 years, that is 2 years later than previously predicted. So how much worse will this global unemployment situation get, and is there any guarantee, if there is ever, of an improvement after that? To help us answer these questions, we're joined by our guests. First of all, in Geneva is Raymond Torres. He is the director of the Institute for International Labour Studies. He's at the ILO. And in London is Raul Ruparel, who's the head of economic research at the Open Europe think tank. Gentlemen, thank you for your time. Do appreciate you joining us for Inside Story. Let's start with you, Raymond Torres, seeing as you are at the ILO working on this particular report. Should the depth of these findings shock us or surprise us at all? We knew things were bad, but I wondered, as soon as I read these numbers initially, I thought, well, this sounds particularly bad and not getting better for a long time.
The prospects indeed are for an increase in unemployment for the world as a whole by something like 6 million people this year and another 5 million, additional 5 million next year. Again, if nothing is done. So in other words, this depends very much on the kind of policies adopted by countries. And I think behind that, there's something even more serious, which is that the labor market imbalances, the unemployment issues are becoming much more structural. So, for example, in advanced economies, you have something like 40% of job seekers who have been without work for more than 1 year. This means that many of those people drop out of the labor market, and it's very difficult to reintegrate them into employment. And the same for investment. Many small enterprises simply become bankrupt, and then you lose actual industrial power or productive capacity as a result of a very prolonged recession.
Which way round is the problem, though? This is one of these chicken and the egg things, is it the low growth and the lack of investment which is leading to a lack of jobs, or is it indeed the lack of jobs in the first place, which means there's no growth? Which do we need to fix first, would you say?
Well, I think one very important policy which has aggravated the situation, one can say for sure, is the turn to austerity measures, to fiscal austerity. Even in advanced economies where the crisis had originated in the 2008 crisis, there was some recovery underway. And somewhere midway, countries shifted towards aggressive cuts in government spending in the name of reducing fiscal deficit, which of course we understand is very important because countries cannot survive with 10%, for example, percent of GDP fiscal deficit forever. So I think that was a very important move to to try to reduce the deficit, but in fact only that was done. And there is no growth and investment and employment strategy that goes hand in hand with fiscal austerity. So I think that's a key issue.
Okay, let me jump in there. While you've brought up austerity, please. Let me bring in Raul Ruparel in London to talk about that very dirty word that came in across Europe a few years ago, austerity. The thing is, austerity by definition means cutbacks, so of course it's going to affect the job market. Is it just a case of that we didn't think it would affect the job market this badly?
Well, I think that is one of the issues. I mean, obviously, there are many different things going on here, particularly in the Eurozone. You look in countries such as Spain, although they are beginning on austerity, their whole economy has been rebalancing over the past few years. They had a massive bubble and bust. So resources have to be moved around and employed in different areas. And that obviously, this huge structural change will obviously increase unemployment. So I think, it was expected to some extent, but obviously it has possibly been larger than many people thought it would be.
Is this the kind of thing that people, those who favoured stimulus over austerity, and I guess seeing as you're in the UK, you can point to the likes of the last government, the Gordon Browns of this world, who said, don't risk the recovery, keep stimulating, is what he said. Can they now point to this and go, hey, we were right?
Well, I think that is the trend that is coming up now. There is a big discussion going on between spending or austerity. And I think it is, this sort of dichotomous argument is a bit of an oversimplification. I mean, you really need to strike a balance between the two. I think if you look at Europe as a whole, over the past decade, there was a huge increase in credit. There was a massive credit boom in many countries. Both private and public sectors borrowed huge amounts. And then when the bubble burst, you had these huge banks and these huge governments with a lot of debt that they couldn't finance. So I think some deleveraging and some adjustment is natural in the Eurozone, and it has to happen. The question is not really whether it's growth or austerity. I think there needs to be a balance between the two. And the question is, at what pace do you progress with this austerity? And I think the level of cuts which need to be made and a level of adjustment that needs to be made in some of these countries is huge. If you look at the state in Italy, in Spain, in Portugal, in Greece, it counts for over 50% of the GDP in most cases. And it simply cannot go on. It's very inefficient and very bloated. So there are changes that need to be made. It's just a matter of how you structure these changes when they take place. And, I don't think enough thought has been given to that, definitely. And, Germany in particular has been pushing for simply austerity and cuts as quickly as possible. And I don't think that is possibly the correct way to do it. You need to bring in some pro-growth measures as well. Some support for employment as well, and some move to increase the competitiveness of these countries.
Gentlemen, let's bring someone else into the conversation now. Joining us from Brussels, we've got Sunny Kapoor, who's the Managing Director at Redefine, which is an international think tank. Thank you for joining us as well. We've been discussing so far the issues of, obviously, unemployment and just their austerity. Let me just get your views on austerity, how much of a factor this has been in the jobs decline, and whether, in fact, this is the point that governments have to reassess.
Well, I think they absolutely have to, and I think they will. The question is how long they will wait and what the social, economic and political costs of waiting that long would be. Therein lies the danger point. As we have seen between last year and now, evidence has really mounted that what worked for Sweden in the mid-90s as a small open economy, where it managed so-called growth-friendly austerity, is simply unworkable in an economy the size of the European Union, in particular within the Eurozone, where there's no flexibility of exchange rate, in an environment of low global growth. And this austerity 2012 is going to be when it starts moving from headlines to actually start hitting people. We had austerity last year, but it was very modest. It was limited to the smaller economies, in particular Greece and Ireland, for example. Macroeconomically, it was not very significant for the Eurozone. 2012 is when it is really significant. And we have to remember that this is happening at a time when consumers' confidence is already low. Many people, particularly, for example, in Spain, are underwater with their mortgages, so they're not going to be spending money. The banking system remains on life support and is very fragile. And there is simply no factor, apart from someone coming from Mars and starting to buy Eurozone goods, which is going to get us out out of this problem. And so the solution has to come from within, which means growth has to come from within. Otherwise, we are not only going to threaten the social fabric in certain countries, which we already are, as well as the political construction of the Eurozone, but we are very importantly also not going to meet the one objective that our policymakers seem to have set ourselves, which is improving the state of the public finances. The debt to GDP ratio is going to get worse as the GDP shrinks, and austerity measures targeting deficit reduction will be much, much less effective than they would be in an environment of growth.
Oh, I'm looking for some good news, not finding it at the moment. In fact, I'm going to heap a little bit more on just before we go back to our discussion. I want to show our viewers just how much unemployment rates have been rising. Notably in European countries we've been talking about, the ones which needed the bailout. Sonny was talking about that there, but not exclusively those countries. At the top of the Eurozone leaderboard, or the bottom, perhaps as it were, you've got Spain. It hit a record 24.4% unemployment rate. The economy's still slowing, expected to shrink 1.7% this year. And you've got concerns that Spain's debt is just unmanageable. Greece, we heard about there as well, unemployment at 21.8%. That is after years of austerity, which some say has in the end worsened the recession there. You've got the United Kingdom, one of the world's top 10 economies, where youth unemployment's running at 22%, almost 3 times that of Germany, which is of course in the Eurozone, unlike the UK. And Italy, the third largest Eurozone economy, with a jobless rate of 9.3%, but perhaps of more concern, public debt of more than that when you combine, in fact, Greece, Ireland and Spain. Sorry, more bad news again there. Let's go back to Geneva and talk to Raymond Torres from the ILO about this. I want to pick up on the point we made about the UK there, where youth unemployment is a big problem. This is a factor in a lot of countries. I've read your report. You said you're very concerned about youth unemployment. And what it sort of reminds me of as well is the likes of Tunisia and Egypt. Those became very political events, obviously, but a lot of that was sparked from young people who didn't have a job and who felt they just weren't going to get a job.
In these countries, in Northern Africa, the problems actually predated the crisis. Youth unemployment was high already before the global crisis. The only thing is that there was a possibility for young people, especially educated young people, to move to other countries, to emigrate to other countries and find jobs there. And with of course, the crisis in Europe and in the US, in other parts of the world, the possibilities to emigrate and find employment have been reduced very much. So I think this has added a lot to the dissatisfaction and social unrest in these countries. And the same in European countries. Youth unemployment is a tragedy on its own, but in addition it adds to the risk of social unrest. In the report, we estimate that in the majority of advanced economies, in the vast majority, the risk of unrest has increased. And I would say there's something deeper than that, which is that people may understand that there is a sacrifice or there are efforts to be made to the extent that they see that the strategy is being pursued makes sense and is successful. But the strategy of austerity, not only has it damaged the economy and the job picture, but in addition, even from the point of view of the very target of austerity, which is to reduce fiscal deficits as a percent of GDP, this has not been successful.
So how would you tackle? How would you tackle the issue of youth unemployment then? Because, and this is maybe a bit simplistic, but that should be the easier one. Young people who are deciding what they want to do, looking for an opportunity, get them out there, get them trained, get them skilled up, get them with the tools to get a job. Whereas people who've been in the workforce for a long time and perhaps been out for a while might find it more difficult to come back. And surely we can hit youth unemployment, or at least the training side of things.
In general terms, youth unemployment or the recent increases in youth unemployment are due not at all to the education system, but they are due simply to the fact that there are very few jobs created in the first instance. And young people have to enter the labor market, and when the labor markets do not produce jobs, of course, they are affected disproportionately. But in addition, you are right that there are policies that can be done. I mean, one should not wait so that there are more jobs created in general, because we know there are policies that work. Policies that help combine education with work experience. This is why countries like Germany, Austria, the Netherlands and Denmark, the 4-star performers in this respect, perform a lot better than others in terms of integrating young people into the labour market.
Raoul Rapara, let me come to you in London. Actually, just get a quick view on youth unemployment there. As I pointed out, it's very bad there. Anecdotally, what do you see there? And I guess it's probably a lot of despondency amongst young people that they're just not going to get a shot for a good many years to come.
Well, definitely. I think that is a growing feeling in the UK and in other countries in Europe which have high youth unemployment. But I think, we mentioned there the structural changes that can be made and the policies that can be undertaken to tackle this. And I think one of them is definitely reducing duality in the labour market. I think in many of these countries, I'm thinking in particular of Spain and Italy, they have a very strong dual labour market where you have long-term older workers which are very secure in their jobs and have essentially jobs for life. And then you have these new younger workers coming in which basically don't get a shot at a full-time job, often get put into temporary work, which is a lot easier to get pushed out of. So I think there are some structural changes which need to happen in the labour markets to help tackle youth unemployment.
I've been trying to look for some good news. I reckon I've got some here, gentlemen. I'm going to show this to our viewers to give us a look at away from Europe. This graph, which we're going to show you, the US unemployment rate dating back to late 2010 when it was up, December 2010, a peak of 9.8%. It has steadily gone down, levelled out through the middle of last year, 9.0, 9.1% for a long time, for about 6 months there. But ever since then, it has gone down. It is now at 8.2%. Now, that's still a very high rate, of course. Sunny Kapoor, let me come to you in Brussels. It's still a high rate at 8.2%, but they're doing something right in the United States. What is it?
Well, it's just that they are not making all the same mistakes that we are, which are self-inflicted. The second thing I think to remember, and this is a tale of caution in terms of your good news story, is that the Eurozone might still pull the United States back into a recession. So let's not forget that. But I think it's important that we have a growth strategy. So one of the things we've done is we suggested something called the Growth Compact, which looks at a number of parameters. The first one is the need for public investment. The austerity cuts first and foremost fall on public investment because it is politically much easier to cut. Now, not only does that take demand away from the economy today, but it seriously reduces future potential demand. Now, the European Investment Bank is our public investment bank, and it is shocking that at a time when the private sector banks are stopping lending and are deleveraging, that the one public institution we have is also decreasing its lending. So the first thing we need to be focusing on in the Eurozone is to be increasing the lending capacity of the European Investment Bank. That can be done cheaply, and it will mean that for every euro the EIB puts into the economy, the private sector, which is sitting on record levels of cash, puts in as much as 5 to 6 euros. So we can find employment for many of the people who've been laid unemployed, particularly, for example, in Spain because of the collapse of the construction sector, etc., some of the youth, some of the less skilled people, in order to deploy them into infrastructure projects, of which Europe
Sunny,
needs quite a few, many.
Do you mind, Sunny, sorry, if I drift you back towards the United States? I see what you're doing here, showing the mistakes that have been made in Europe, but I'm trying to get a handle on what was done differently in the US particularly.
Well, I think the first thing they did right was to tackle the banking system problems up front. In Europe, we refused to first recognize, particularly in the Eurozone, the scale of the banking problems when the financial crisis first hit. And if you go back to the end 2009, early 2010, many of the problems in the banking sector that now seem to be big still existed. But politically, it was very convenient for European politicians, in particular, for example, in Germany, to suddenly change the terms of the debate to that of lazy Greeks. What it meant was that the focus in the Eurozone of Eurozone policymakers was shifted to the so-called sovereign debt crisis without having tackled the endemic problems in the banking system. So now we have ended up with the perfect storm, where not only is there actually a public debt problem, partly because our policymakers have talked up about how serious a problem this is, but there is also a massive black hole at the heart of the banking system. The European banking system, as we know it, would not exist today were it not for record levels of public support. So that is one of the big factors why the situation in Europe is significantly worse than that in the United States. Our failure to have tackled the problems in the financial system.
Rahul Ruparil, your thoughts on that? Why we've seen the victory, comparative victory in the United States as far as the fight against unemployment goes?
Well, I think partly they've been able to cut a lot less quickly, and they've had more growth. I think it's probably as simple as that. And you've obviously seen huge safe haven flows, which made it very easy for the US to finance itself and has reduced the pressure on the need to cut spending. And I guess some of the political obstacles there, which have meant they haven't instituted the level of budget cuts which maybe some would have wanted, has slowed down this force of austerity and allowed them to have higher spending and higher growth. But I think it is, as we've heard, it is a very different situation to what's going on in the Eurozone. And I think the political tensions within the Eurozone and Europe, particularly with just the completely different approach coming out of the north than the south, has meant that it's been very difficult to find any sort of happy medium or middle ground to address these problems. Whereas in the US, maybe they were able to take a bit more of a cohesive approach and deal with it as one country with the institutions that they already have in place to tackle these sorts of issues.
Yeah, fair point, exactly. Raymond Torres, one of the other points I noticed in your report was, if we're looking at some positives, was employment success in developing countries, also places through Asia as well. Again, what's the difference there? Is it, as Raoul points out, that Europe's situation was so acute and so unique that other places were able to capitalise in their own way?
I mean, to some extent, it is true that in these other countries they didn't suffer from the same type of financial crisis as advanced economies, as Europe or the US, so they were in a much better shape from the financial point of view, if you wish. To some extent also, in particular in Latin American countries, they benefit from abundant natural resources which are very much demanded by China and the expansion in other countries. So they do get, in a way, a rent from those natural resources. But I have to add to this that these countries have gained a lot of independence and autonomy in policy making, in particular in labor and social policy. For example, Brazil has adopted innovative social policies and employment policies, as well as Argentina. These are two countries where, and it's very exceptional, I have to say, the incidence of informal employment or precarious employment has declined, which is very rare by international comparison. And also income inequalities have also been reduced. And I think it's because basically they have much more audacious employment and social policy. They try to integrate employment and social policy with macro policy. They try to do something which has been undone now in Europe, which is basically to reduce active labor market policies. In other words, help for job seekers to find new employment or to get retraining. So they are actually emphasizing that, finding their own way, and they are rewarded with good results.
The thing is, gentlemen, all three of you have got great ideas. You've given us all ways forward. The key is for politicians to listen and take action. That seems to be what all of you are saying. But as soon as you get politics involved, it all changes, doesn't it? Raoul Rupara, let me come to you. You know, we've got elections in France at the moment, potential changes there. That could change the relationship with Germany. These are the two countries who've led the fight back in Europe. All these sorts of things. Do you think anyone's listening?
Well, I think that there's a lot of talk going on, as you say, and there's a lot of change going on at the moment in the Eurozone. And, you know, growth is really the new hot topic now, and everyone's talking about it, and it's become a huge part of, as you said, the French and even the Greek election. You know, there is some hope there that they are coming round to this idea of the necessity of growth and that they do need to adjust their approach a bit away from simply austerity to tackling the growth issues. But you also have to worry that they're still not facing up to the structural flaws in the Eurozone. The politicians still see it as a simple crisis of policies in a few select countries rather than a crisis of the Eurozone as a whole. They don't really look to be tackling the competitive imbalances between the different countries or finding a way in which you can have a feasible political union with countries such as Germany permanently sending money or permanently helping to finance the southern states. So although there is signs of change and signs for hope, you know, I'm sure that some of these political problems that you mentioned will remain for a long time.
Well, I hope our European leaders can watch Al Jazeera English and watch this program. Perhaps get some ideas from the three of you. Thank you, gentlemen. Raymond Torres with us from Geneva. Also in London was Raoul Rupara, and in Brussels,
thank you,
Sunny Kapoor. Thank you, gentlemen. Appreciate it. And thank you to you, our viewers, for joining us for this edition of Inside Story. If you want to send us your feedback, please do. InsideStory@aljazeera.net is our email address. I'm Kamal Santamaria from the whole team. Thanks for watching. Goodbye for now.